All right, folks, I got the top of the hour here. Again, Jeff Clark, I'll be your speaker today. I'm just going to start kind of slowly rolling an intro, etc. As we get, again, more and more people in here. We have quite a large class today. So first off, I just want to thank everyone for coming on and spending a little time with us. I'll try to get this done within a half hour. I try to keep my webinars to that kind of length if I can. And just some housekeeping items. If you'll see on our screen here, 800-842-7799 is our number. If after this presentation or anytime you have any questions about the extended care market, etc., please call us. You can also visit our website at goldencareagent.com. There you'll find all kinds of resources and tools, but mainly you'll find a library of all of our webinars and all of our recorded training sessions on all products, selling techniques, objection stoppers, just like the webinar we're about to do. So secondly, we will be sending out a copy of this PowerPoint to everyone that attends. So don't worry about taking a bunch of copious notes. I will be going through a lot of the stuff here, and just a little background. This will be focusing on short-term care today, and mainly the two best products, Aetna and OmniFlex. I'll explain why that is, and then we'll basically just explain the differences between the two plans. It is becoming a bigger part of what we call the extended care market. Just a little bit about myself. I've been with GoldenCare for 27 years. I spent my first 6 years in the field selling long-term care exclusively. I've written around 700 long-term care plans, probably only as few as maybe 25 short-term care. I'm not in the field as much anymore. But I really do believe in this short-term care. It's really come along and saved this industry. And I'm about to start my PowerPoint here, and I kind of speak to that. But for those of you who are on there and you're interested more in the short-term care, I think you're on the right path. I do think that this is something that's going to save our industry. Long-term care is not going away, but with the advent of the hybrids, the life and long-term care mix, the long-term care and now short-term care, there's a lot of different options out there for folks. And I do feel like the short-term care is really coming along to be a very, very good option in so many situations that when we quote people now that are asking for long or short-term, I'm not afraid to kind of show them both and explain the differences. And so I'm a big believer in short-term care. For everyone's COVID, maybe it's time to take the slide down, but I can tell you that our own websites, the feelers we have out, we've never had more people hitting our websites with curiosity about long-term, short-term, extended care plans. Post-COVID, a lot of folks got shooken up a little bit about being in the facility, and really it just woke us up to disease and needing care. And so, a Harris poll recently, that 61% of people said they'd rather die than going to a facility of some kind. That doesn't surprise us. But more interesting to me, I guess, is that 90% of adults have never had a discussion about long-term care. And I promise you, they're waiting. I saw another stat somewhere, 89% of adults would look forward to an advisor or an agent reaching out to them about extended care policies. So none of them have heard about it, and they're wanting to hear about it. So I would say for those of you agents that maybe are a little more apprehensive to pitch it, that if you do bring this topic up, it will be very well received and welcomed by your clients. And we're here at GoldenCare to help you. So if you want to wade in that water, you're not sure how the plans, visit with myself or any of the marketers here. We'll get you coached up and get you ready for that appointment. So don't be afraid to offer it. You might be surprised at how much you get there. Okay. Oop. All right. So we like to call this a shifting market. Go back in here. So the extended care market, like I mentioned, just 10 short years ago, there was 50 companies selling long-term care insurance. And I think we had, we didn't even have a short-term care company. Hybrids weren't that popular, but so we wrote 5 long-term care plans for every one hybrid. Now it's like 5 hybrids for every one long-term care. Long-term care itself has had some rate increases, some growing pains, just the premiums have gotten higher. The carriers, like I mentioned, there was over 50 10 years ago. We're down to 3 carriers in the long-term care arena. And that's just mainly, I tell my brokers, look, insurance companies don't leave products that they're very profitable in. If they're making a ton of money in long-term care, they wouldn't leave. Fact of the matter is that long-term care is very expensive on these carriers. It's hard on them. They pay out a lot of big claims. Genworth, Hancock, they got out. They had way too blocks of business, and that was very hurtful on them. And so we don't see as many long-term care companies in the market, and we do see a lot more short-term care companies coming into the market. And we do believe that this shift is kind of what's going on, is that More and more business is going away from long-term care for a lot of reasons, mainly because it's expensive and it's hard to get. But so now we have this option of short-term care, and as you'll see as I go through this, it's nice to be able to help more people. So I'm so glad that short-term care is becoming prevalent because it is allowing us to help some more people. If you look at the old days of traditional long-term care and hybrids, half the people we talked to, we couldn't help, right? They'd reach out to us and we're just talking about maybe they're diabetic, maybe they had, any type of ailment. Long-term care underwriting got very difficult. If you look at the bar right there, half the people 70 years old are being declined. Actually, I've seen stats a little higher than that as well. It's really tough to get the 70, 74-year-old, even the 66 to 69-year-olds underwritten. You're losing half your business. Or if they do get through underwriting, they don't take it because of the expense. So it's really a murderer's row. Then when you look at, short-term care, we're able to help a lot more people. So now when I go out and I create this need with short-term care and some other plans that in the extended care market, home care only, we're able to help a lot more people. And so we really do feel like the short-term care can kind of save this extended care market, this industry in general. So, so then we just look at some numbers, and I try to tell all my agents this. In reality, if you've been in long-term care as long as I have, and as the prices went up with long-term care, we started kind of writing less and less benefit. Now, if you look at the average lengths of care, and again, there's all kinds of stats on this, but generally speaking, males are going to use about 140,000 worth of care, females 167,000. I've seen stats right in those neighborhoods. Unpaid care at home, about average 1 year, 60% of the, less than a year is 42%. Facilities, again, a third of people are only spend a year there. I've seen stats where, only 80% of people don't go beyond 2 years. If you talk about beyond 3 years, it's like less than 5% of people. So most of what we're seeing for LTC claims are 1 to 2 year claims. That's just a bulk of what they are, okay? And so I try to point this out to agents because I'm also in this category. GoldenCare writes quite a bit of long-term care premium. We write about $10 million a year just with Mutual Omaha alone. And so we pulled the last 3 years, the long-term care business, about $30 million worth that we've written. And if you look at that, 65%, basically 2 out of 3 policies that we write have benefit pools of between 2 or 3 years, which means it's about 150K to 250K. That's the insurance levels. We're selling about $200,000 worth of insurance, long-term care, okay? Only 15% of the time, we're doing pots of money of greater than $250,000, okay? So a bulk of what we're doing, especially when you look at the 65-year-olds, because then it gets really expensive. And I didn't have it broke down there, but I would argue that probably close to 90% of the people that we're writing over age 65 are 2 year benefits or less, maybe 150,000, 175,000. And why is that? It's because long-term care has become so expensive. It's so hard to get. So in reality, we're already writing short-term care. So any of you long-term care purists out there who maybe think, it's beneath you, and I have them, trust me, I have guys all over the country, girls, and good agents that are great long-term care agents that just refuse to kind of write short for some reason. They're hung up on the benefits not being as good or whatever reason. And I always tell them, look, the short-term care benefits, and you've probably seen this slide before, I can sell basically if I max out the facility and the home health care, I can sell a $252,000 pot of money with short-term care. And it's got restoration. So really it's like selling them 504 because it's reusable. If I put inflation with that, double them, right? Up to $1 million. So you can really sell a pretty darn robust benefit in short-term care. And a lot of folks don't realize it. We're kind of hung up in the idea that short-term care is short-term. It's like following a hospital stay. It's like 3 months. We just did a survey of agents not too long ago, and a lot of them still have it in their head. They thought they were 3-month plans, 6-month plans. They had no idea they could get $250,000 of benefit out of them. So, okay, with all this, I'm going somewhere with this. Okay, so we really do feel like short-term care can save this industry, and I think it will. I think it is currently doing it. And why is that? Because you don't have these long, big plans that the long-term care companies are writing, unlimited benefits, 5-year plus. The short-term care is a maximum 2 years payout. Caps the individual risk for the carrier. There's less inflation, so you don't have these ginormous pots of money that are growing at 5% compound, unlimited benefits. So there's no real catastrophic claims for short-term care. okay, which again just makes it a lot safer as a carrier. Because of these huge claims, long-term care is underwritten very stringently. Short-term care is a lot easier to get people issued. It's a long process. If you sold long-term care, you know, it takes 6 to 8 weeks. They have to get medical records and additional info. Short-term care gets issued in 7 to 10 days. Okay. Overall, with all this stuff in there, we just do really feel like short-term care allows us to help a lot of those folks that we couldn't help anymore. It kind of allows us to go back to the future. Back when I was selling, I guess, in 97, 98, 99, and early parts of 2000, you know, our average age of people we wrote was 71 years old. And they would all get underwritten. It was great. In retrospect, it was probably not very smart of the companies to underwrite all those folks in their 70s. So they have gotten wiser. They've gotten smarter. But because of that, the long-term care companies have protected themselves, and it's made it really expensive and really hard to get long-term care. And so a lot of the agents got out of the market altogether. So we really do feel like if you haven't gotten out, there is a big opportunity to help people because the need for care has not went away. It's not going anywhere. There's more and more people that need care. We're aging as a society. We're running out of able-bodied caregivers. There's just fewer people in the workforce for all the people that are collecting benefits on Medicare. We're getting to be top heavy. You guys all know the stats. Baby boomers, et cetera, et cetera. So the need for these products are growing, yet the carriers are disappearing. I would argue that you need to go into short-term care to be able to help people. Okay, so a slide that I use a lot here is that we do believe that the short-term care plan deserves to be in the conversation when you're talking about extended care solutions like long-term care or the life and long-term care hybrid plans. Don't be afraid to start quoting these, and we'll show you why. Okay, meanwhile, so GoldenCare has added to their portfolio all the short-term care plans that are available right now, and there are 6 of them. Okay, the 2 ones that have been around forever, the GTL, not forever, 7 to 10 years, GTL's Recovery Cash and Aetna's Recovery Care. Okay, GoldenCare played a very big role into putting together the OmniFlex with Manhattan Life. But since then, you know, you've had Wellbe come out with Essential Care. You've got Choice STC by Cigna Healthcare, Vantage Recovery by Bankers Fidelity. And as I understand, there are a lot more out there. To tip our head, but there are more companies that are designing short-term care plans as we speak. I suspect next year at this time, we'll probably have 10 or 12 out there. Okay, this is where it's kind of going, and don't be afraid. So today, what I want to do then is, yes, we have 6 of them. Okay. Yeah, we'll do this. Okay, I'm going to talk about the 2 best. Now, how have I arrived at? Let me come back to this slide actually. Okay, let me do this one. I'll go backwards. So why have I chose OmniFlex and Recovery Care as the 2 best out of these 6? This slide right here, this is the trump card. This is how, if you're measuring, looking at these plans, to me, again, my humble opinion, you just don't write the other ones. If you don't have multiple restoration of benefits multiple times, I can't imagine why you do that to a client. What they're meaning by this is, and actually, let me go back. So first off, some people might say, because we're used to long-term care thinking, restoration of benefits, well, it never happens, right? Because in long-term care, remember, for someone to go on claim, they had to be in pretty bad shape. And they would have had to have certified that they need help with 2 out of 6 ADLs for a period of 90 days or longer. And so once people do finally get into a facility because they've had that stroke or Alzheimer's, it's very rare they came back out. They were already in care for longer than 3 or 4 months before they even got the claim, right? So we started seeing restoration of benefits disappear out of long-term care plans because they just didn't happen. Short-term care, not quite the case. So let me go backwards. I'm going to come back to this slide. But so if you look at short-term care plans, they don't have the 90-day certification requirement. And this is so big to understand. So I promise you, if you get nothing else, understand that in short-term care, this 2 out of 6, there's 2 ways to claim to trigger a short-term or a long-term care plan. It's 2 out of 6 ADL deficiency, you know, the activities of daily living. So if you can't perform 2 out of the 6, you know, eating, transferring, dressing, maintaining continence, bathing, all right. Or if you're cognitively impaired. So those are 2 ways to do it. The big difference with short-term care is to trigger a long-term care, this 90-day, this 2 out of 6 ADL deficiency had to be a period that your doctor decided or determined that it was going to be 90 days or longer. So therefore, and I can tell you from experience, I have clients that call me all the time, or their children call me and say, my mom had this long-term care policy from you. She slipped and broke her hip on the ice. She's laid up. She's got nurses coming here. And unfortunately, I have to tell them that's not a long-term care claim. She'll be better in a couple months. It's too bad. It's really unfortunate because it is 6 days a week right now. She can't do anything, okay? But it's not a long-term care claim. Short-term care, it would be. So without the 90-day limit, as soon as you slip and break your hip, as soon as you have a knee replaced, as soon as you have, whatever is a heart valve replacement, and you're kind of weak coming home from the hospital. Like my father had a valve replaced and he ended up being complications, being in the hospital for 2 weeks. Well, then he had to recover for like 3 weeks in a rehab center. So all these things you're seeing here are not typically long-term care, but they do pay with short-term care. So then if I go forward again, so just imagine this with the multiple times. So that, again, this is the two things that make Aetna and OmniFlex the best plans out there. So they have a restoration benefits, meaning I can use up my pot of money, okay, the $250,000 benefit pool. So the other carriers are telling you that if you do have a hip replaced and you have care for 2 weeks, all right, that's a 360-day benefit. I know you only use like 6 visits from a nurse, but that pool is now burned. So they all restore one time, right? So now 3 years later, you have a stroke and you got to use your benefits again. Maybe you use, I don't know, a couple months worth and you recover again. That's it, you're done. So when we have people that have the GTL or the Choice STC or Advantage, we kind of advise the clients, if you have a hip replaced, don't do a claim because you're wiping out an entire year of your benefit. So why would I want to tell anyone to not use the insurance that I sold them? Because it's probably more advantageous to hang on to it, wait for Alzheimer's or a stroke or something more severe, so you don't just use 2 days of benefit and then use up the whole pool of money. So Aetna and Recovery Care, I know I'm taking a lot of time on this, but it's so important to understand. They allow you multiple bites at the apple. I can have both knees replaced, both hips replaced, slip on the ice, have all these claims that were maybe 2 weeks here, 2 weeks there, it doesn't matter. You get 360 days twice, so you get 720 days worth of care. Doesn't matter how many claims you have. So you could have a valve replaced, have a heart attack, 2 years later have a stroke, 2 years later have a knee replaced, 2 years later have a hip replaced, and after all of this, your benefits are going to restore again, and you're still sitting there with plenty of days, okay? So I don't even like to argue the other one plans. Frankly speaking, if you're selling short-term care, you better be selling these two, okay? Don't do that to your client. And we love our other carriers, so I'm getting a little, okay. Well, anyways, I'm comparing right now, I don't care. These are the two you should be selling. So I'm going to take a closer look at these two now because there isn't a ton of difference, but there are. So let me point out the differences, and I don't want this to be a fight, if you will. We love our Aetna. We love Aetna as a product. We do sell a lot of Aetna. We have a lot of agents that write Aetna. So if you are an Aetna agent, when you're watching this, I'm pointing out the differences, okay? First of all, state availability. Not much difference here. With the exception, I believe it's Utah, I think. You don't see a lot, yeah. So OmniFlex is approved in Kentucky where Aetna isn't, and Aetna's in Utah. So maybe if you live in Utah, then you'd maybe pick Aetna. But so state availability, we can get this to you. Let me do some basics about the plan because these are pretty similar. Then I'm going to show you the differences. And again, I don't have a ton on there, but all right, 219, good. So issue age, OmniFlex will go down to 45. Aetna's at 50 to 89. You run into that once in a while. We get this 47-year-old that wants care, or they got declined, or so. You got a little more room on the lower ages. Actually, I think it's Cigna's short-term care will go down to age 18. But so I guess if you have a 40-year-old, there are still places to write the other short-term care companies I showed you. I would encourage you to call the marketing office no matter what you have and let us kind of guide you through them. All right. Facility with a home health care rider. So they both have that model. They're both indemnity. The facility benefits are between 50 and 400. And for Aetna, they're between 10 and 400. So again, pretty similar there. You get up to $400 a day or $12,000 a month for facility. Their choice on facility benefit periods, 90, 180, 270, or 360. Again, very similar. Their elimination periods, 0, 20, 60, or 90, or 0, 20, or 100. So again, we do mostly 0 in short-term care world. Facility bed, they both have a 10-day bed reservation. And more importantly, built-in restoration. Both of these you see multiple and multiple there. So very important. Okay. On the home care side, here's where they get a little different. So home health care benefits, we have the OmniFlex is going to have the 90, 180, 270, or 360. Recovery care, same thing. They got a 3-month, 6-month, or 1 year. Elimination periods, theirs is always going to be a 0-day. We always sell 0-day, but we do have the option to go 0, 20, 60, or 90. Say we OmniFlex when we all put together. Okay, restoration of benefits. Yes, and multiple. I think I've covered that solidly enough. I don't think we have to cover that one anymore. Hospital indemnity. So both of these plans are going to offer they're both going to offer a built-in hospital indemnity benefit within the plans. Personally, unless you know the Medicare Advantage world well, and you're talking to your clients, and they have a Medicare Advantage, and maybe they don't have a hospital indemnity yet, I don't like to mix up the sale too much. Just know that it's available in there, but they're pretty close there. Also, premium discounts. OmniFlex does offer a 10% that they both apply. You don't get one with Aetna. And then here's another big one, the optional inflation protection. I have a slide for this later too. There is no inflation available with Aetna. With OmniFlex, there is. So naturally, when you start out at $400 a day, they both have the same dollar amount there. Well, if I can grow it, at 5%, I'm going to have double the benefit come claim time. So that's kind of an important differentiator. Most times we're maxing out benefits when we're selling short-term care, so we're going the whole $400 a day. Okay. So let me go through some other things. I'll come out of the backside here. Again, I'm just comparing really prices and a couple of things that are different. I just showed you that the base of these plans, really the guts, if you will, they're very similar in a lot of the areas. So I'm now the next 5, 6, I'm just going to show you the ones that really stand out, the differences, if you will. First of all, price. Look at the price here, 91 versus what's 20% lower, 22% lower for an OmniFlex. And that's not even factoring the prescription drug reimbursement, but I'll explain that later. So I know the first thing people look at is price. So here, check that one, 91 versus 113. This is for what, $200 a day policy, 20-day limb, full 1-year plan, 0 in the home care for 61-year-old male. All right. All right. The next thing is the underwriting area. I just showed this slide so you could have a reference point. GoldenCare has put together for our agents a thing called InstaPivot. It's on our website. It's one of the tools I mentioned earlier that you can get on. You can access at goldencareagent.com. But for example, if I wanted to know what plans, all the plans that GoldenCare does, whether it's their home care only, their short-term care, their long-term care, so I type in an ailment, whether it be Parkinson's or diabetes or scleroderma. It's going to tell me basically with red, the green check mark or a red X, which carriers that ailment will work for. So we basically went into the underwriting guides and took all these questions down and put them in a big spreadsheet. So for our agents, you have a certain ailment, you put in the state, you put in the particular health condition, and boom, it's going to tell you based on state availability and through all the underwriting gates, what plans will accept this person based on their health. Pretty neat deal, right? So with that, I use this as a measuring stick. So in that in other words, in this, and I start to go back one more time here. These categories here, your left, the blue bars here, there are 33 of these, I believe, 45 rows. 45 rows worth of different ailments, okay? So the OmniFlex will say yes on 33 of those 45 rows. Aetna's Recovery Care, 10 of those 45 rows. I don't know why GTL's in here, but there are 8. But so certainly underwriting-wise, you will be able to throw the net wider. You will catch a lot more people. So maybe it's a health condition that makes it as easy to say, I used to write Aetna, but with this particular health condition, I got to go to OmniFlex. Okay, that's one of the big standouts is that you're going to have a lot better time via underwriting. So if you have some challenging cases, you might want to be looking OmniFlex way. All right. Here are 2 other differences. Prescription drug reimbursement. Now we're used to seeing this in the home healthcare plans out there. I think almost all the home healthcare plans that I see out in the market, Manhattans, Aetnas, GTLs, they all have a prescription drug reimbursement that allows you to either get $300, $600, or even $900 back annually based on your prescription drug use. For example, if you're taking, If you have you get $10 back for each generic and $25 for each brand name, per month. So now with the short-term care, Manhattan Life added the same prescription drug reimbursement to their short-term care plan, only one that does it. So the home care, we're used to seeing the $300 or $600 back. So essentially, most folks are going to get $300 off their premium. Okay, no one else is doing this. Now, there's a second thing that I really think is strong. It's called the Fast 50. It's a cash benefit. So for the OmniFlex, if you go on claim, we know that 80% of claims start at home, right? We also know that 75% of the care that happens at home is done exclusively by family and friends. It just, you're leaning on mom and dad or the neighbor kid, the church is bringing you meals, I don't know, the neighbor kids mowing the lawn or shoveling your driveway. This is just what happens in reality when it comes to care. So OmniFlex has what's called a Fast 50 benefit. If you're scheduled to receive a $6,000 a month home health care benefit, maybe it's $150 a day for home care, so if you, or $200 a day for home care, so if you add up the month at $6,000, they give you an option to say, we can fully indemnify you for each day a nurse comes out there, or if you'd like, we'll just give you half the amount in cash, and that way you can pay your spouse or your neighbor or your daughter or son that's helping out. And I know how popular this is back to long-term care days. We used to market a lot with back in the Transamerica days. We had a 40% cash benefit rider. We carried that into the Mutual Omaha long-term care plan. And we know that almost 70, 80% of people that went on claim access the cash benefit. So we know how important this is. We know what happens come claim time. It's usually family members that are rallying around. So the other carriers don't really make much of a accommodation for that. Now the Fast 50, and I think I have a continuous slide on this. So it pays for those things, again, all that informal care. I'm going to come back to this again too. We've been writing OmniFlex now for a little over 3 years, 3.5 years, 3 years and 3 months or something. So we've got a little over 4,000 policies written now. We've had 3 claims, that's it, and all 3 were Fast 50. That's how popular it is. And this just goes back to long-term care thing. Having an ability to pay your family members a cash benefit is paramount in any extended care plan, because that's just in reality what happens. 75% of people receiving care at home, I think I have a staff this later, are relying on family and friends. Okay, so matter of fact, I think that's going to come up right now. Yeah, 78% of adults living in a community needing long-term care had to depend on family or friends as their only source of help. Okay, I've heard this stat a lot over the years. How many unpaid caregivers are out there? 53 million of us are currently caring for an aged parent or loved one. It's 1 out of 5 adults. If you go into the workforce, it's like 1 out of 3 people that work are taking care of an aged parent or loved one. So this is very real. And these charts are a nice way to say it, but this is who's really doing the care. 53% here, home health aid is going to be the unpaid caregiver. There's a variety of people that help out here, but this is all very basic in nature and not covered by Medicare, not covered as part of why the extended care is so important. So the Fast 50 is a really big differentiator, okay? Then the prescription drug reimbursement, I talked about this too. You get $300 off your premium each year. Great, provided they're taking some meds, but most of the folks these days, it seems like they're taking at least 1 or 2 meds. Not everyone. I just quoted one earlier this week where the husband and wife, I think the gal took one generic and the guy took 2 generics. So they're not going to quite get to their full 300 each, but anyways, it's $300 off each premium for husband and wife, which I haven't factored into that price when I showed you the $91 versus the $113. That was before even the RX benefit reduction. So if you factor that in, OmniFlex usually runs around 35% less premium. All right. Last thing here I think I have before I go into some other comparisons. Yeah. So this is the inflation rider. I mentioned this earlier. So with OmniFlex, and I just have the couple of other carriers here, the Essential Care, that's Wellabees, and Recovery Cash is GTLs. But Recovery Care by Aetna doesn't have any inflation for your benefit. So you max it out, that's all you can really do. So we pretty much always max out Aetna. So with OmniFlex, it not only increases the facility side, but it also increases the home health care side. So if you look at the Essential Care, they grow all 3, but they don't grow the cash benefit. I don't love that because I just told you how important having that cash benefit for family members is. Well, they don't grow that portion with their inflation. Then you look at GTL, they don't grow their home health care side. So you get inflation, but it's only increasing the facility, not the home care. And then Aetna, they just don't have it, period. So again, that's kind of a big feature, big option, because remember, short-term care, we're trying to load this up, make it act like a long-term care plan. So I want to be able to max it out. That slide earlier showed you that I could get $250,000 pot of money with restoration. It's worth $500,000. Well, if I put the inflation with that, it's worth $1 million, right? Or $500,000 if it doesn't restore. Okay. So now I'm going to talk about claims time, and I'm just about coming on the back end of this thing. So I'll open up to questions. I'll go ahead and read questions on this thing here, but let me show you kind of how the benefits lay out come claim time on down the road. All right, because you guys are probably wondering, why is OmniFlex so much better? There is a reason for that. Okay, so this is just a benefit period where we just laid out a basic plan: $200 a day for facility, $300 a day for home health care. Okay, 0-day limb, 20 in the facility. And then so with Aetna, how they work is they do $200 for facility, but they do a weekly home health care benefit versus a monthly one, right, or daily benefit. So where OmniFlex is going to have that $300 for every day someone comes through there, Aetna will pay you $1,200 a week. But the only caveat there is, and I don't love this, you have to have at least 3 visits a week to qualify to get the $1,200. So if you get a nurse coming out once a week, it's not going to help you, right? So with OmniFlex, if she comes out once a week, you get $300 for that day. And if she comes out twice a week, you get $600. With Aetna, you're getting nothing. So is it stronger if you only have a nurse coming out 3 times a week? Aetna's going to kind of come out a little bit ahead, right? So, but again, I don't love the 3-day-a-week requirement. I got to imagine you could work with your doctor and just make sure you get another nurse visit there, and so you're actually that benefit. But so anyway, they're a little different. One's a weekly benefit and one's a daily benefit. So okay, with that, this is a slide that Tom Randall, my colleague, put together, and I'm going to kind of go off this, just basically what we're doing here. There's a lot of numbers here. I broke it down from here, but essentially what we're doing, is we're looking at OmniFlex versus Aetna. $200 a day, like I mentioned, $1,200 a week, the slide I just showed you. And so it's really at claim time. So don't worry about this. Tom Randall is the author of this slide. There's a lot going on here. So I've broken this slide down just to look at, okay. So here is OmniFlex and Aetna side by side. Down here, again, that case design, $200 a day each for facility, $300 on the home care, or $1,200 a week on the home care for Aetna, 0-day hospital indemnity, okay. So first of all, premiums, $1,440 versus $1,938. Then remember, there's a $300 drug reimbursement, so that could be as low as $1,140 versus $1,938. So right at the get, a lot cheaper, right? Okay, now right at the get, OmniFlex is reduced down to 100. I'm going to talk about the ramp up in about 3 slides here, so bear with me. So their facility, the total for the year then turns out to $36,000. as opposed to $72,000 for Aetna's. Home care, $150 versus I broke that weekly into that weekly amount into a daily amount, so it's $170 versus $150. So pretty close there, right? So right at the get there, pretty close there, but the Aetna's facility care is bigger. And this is, okay, now if you look at 3 years from now, okay, now the facility benefit for OmniFlex, and I'm going to talk about the ramp up here in just a second, has grown to 57 versus 72,000. There's no inflation in this particular example, just to keep things easier for us. Now the home care started at 54 versus 62, but now it's grown to 86,000 per year versus 62,000. The facility in year 3 is 57,000 compared to 72,000. Okay, remember the premiums here? We're at a lot less premium, aren't we? Okay, let's look at 5 years down the road. 5 years down the road, now it's a wash. Both are paying 72,000 facility, but look at the home care, paying almost twice as much, right? 108,000 versus 62,000. Premiums again, 86 versus 11. That's not even factoring the $1,800 worth of prescription drug reimbursement that the person either may or may not have gotten. 10 years, of course. At this point, again, similar results. 108 versus 62. $72,000. You've paid in a lot less. So what's going on here? Again, that's what this slide is kind of determining, and there's a lot going on there. So I try to break that down just to make it easier. So why does OmniFlex start out a little lower and then catch Aetna? This is what we call the secret sauce. So everyone on this call, I assume, is familiar with what's called a graded benefit, like for a burial. So maybe you want I don't know, a $10,000 burial fund, but this person's had a history of heart attacks, they're diabetic, they can't get a regular burial or final expense plan, they have to get a graded benefit. So that means the first year it's going to pay $1,000, second year it's going to pay $5,000. From year 3 and beyond, it'll pay the full $10,000. Same concept's going on here. So we put this together in such a way where it protects the short-term care company from that, immediate claim 1 year into it where they get whacked right away, right? So it's adverse selection. 5-year ramp up on benefits. It's not a negative. So we have some people that'll call here and they'll say how negative this is and that. Well, look, it's lower right away. Like I showed you, the home care is almost a net with Aetna right away. And yes, the facility is about half of that. So it builds up. So if you look at how it works, if I had a $400 a day, okay, let's see, base benefit between $50 and $400. So the first 5 years, it builds up. So you're at 50% of your benefit, 60, 70, 80, 90, 100% after 5 years. So there is a little give up. That benefit takes a little while to get back up to full. So it starts out where it backs to half. This is the facility and the home care. Okay. So how often then do claims happen? Well, I mentioned earlier, we've written almost 4,000 of these plans now. We've had 3 claims in 3 years. So the answer to that question is, and we didn't have one until like the 17th month. So how often do they go and claim in 1 year? 0 out of 1,000. How often do they go and claim the first 3 years? 3 times out of 4,000. So again, less than 1 out of 1,000 times, someone's going to go on and claim in this part of the bar graph. So that you can argue this negative that, yeah, but what if I write someone the Aetna versus and they go on claim in year 2? I'm like, well, there, you just hit the bullseye. You should play the lottery tonight because you're the 1 out of 1,300. So in other words, for that little bit of give up, again, we call it our secret sauce, but I don't think it's an argument. For that that outlier, what that does is this by lowering that amount a little bit, the carrier doesn't get burned in years 1, 2, or 3. They can do everything I just showed you. They can throw that net wider on underwriting. 33 different health ailments they can take versus 10 that Aetna can. Their premiums are 30% lower. Their benefits, home care wise, are almost twice as high. They can offer a cash benefit. They have a prescription drug reimbursement. They can do inflation, by the way. So if you look at someone buying this at age 60, claims happen 25 years longer. OmniFlex is going to double from what you already showed you. I'm just showing you the comparison just straight up without inflation. Imagine if you put inflation on there. Okay, so this secret sauce is something I don't like, but it's not a secret, but when you sell this, it's kind of actually a graded benefit. And again, how often claims happen in the first couple of years? They don't. They just don't. Okay, and if they do, it's a 1 out of 1,300 shot. Really bad luck. But even still, your home care, because remember, Aetna at maximum is $1,200 a week. That's $4,800 a month for home care. If I sell the full amount with OmniFlex, $300 a day, that's $9,000 a month. Even if it starts at 50%, that's $4,500 a month home care compared to Aetna's $4,800 of home care. It's almost a wash. And so, and again, 70, 80% of claims start at home. So right off the get, you have the same benefit level in the home care arena as Aetna, and you don't have that 3-day minimum care restriction. So really, that's kind of a wash there in the home care. So we're talking about the facility. So again, how often are you going to write someone and then 3 months later they're in the facility? I can tell you how often, about 1 in 1,000 or a little less than that, 1 out of 1,200, 1,300. Okay, so just so I can explain that part very clearly, at the end of the day, there's 6 short-term care plans out there. I throw out the first 4 because of that multiple restorations. I'm telling you, that's a huge factor. So if you're writing anything, make sure you're writing these 2, okay? But then, if I really had to pick a winner here, with all the things I just showed you, OmniFlex is the clear winner right now. Now, I bet you, like I mentioned earlier in the presentation, a year from now, there's probably going to be 12 short-term care plans out there. Let's see what they do. GoldenCare may or may not have a hand in a couple of these that are being designed as we speak. I don't want to let the cat out of the bag, but we're always working with carriers, working with partners that are trying to develop better products for our agents. But right now, this is a heck of a home run. If you're not working the OmniFlex yet, and you're just in the long-term care arena, you need to start looking at short-term care. If you are in short-term care, you need to start looking at OmniFlex. So folks, that's all I really had for you. I'm going to leave this 800 number up here. I'm going to see if we have any questions. Okay. I can tell you that if you haven't gotten licensed with Manhattan Life yet, please do. Get started here. We'll get you some contracting out. Give us a call, 800-842-7799, or go on to our website, goldencareagent.com. You can send an email to marketing@goldencareusa.com and say you want OmniFlex. Someone will call, reach out to you, shoot you some contracting, but we'll get you going on this. Maybe you have a case, a couple that you just quoted long-term care, they're not going to fly, couldn't afford it. Give us a call. We'll game plan with you. We'll put together some plans. We'll walk you through the software. We'll walk you through the brochure. We're here to help you. We'll make you look really good. It all starts with bringing us what you got and taking that dive into the extended care market. So I'd encourage you to do it. GoldenCare is here as your partner, and we're just so happy to help you with that. Let's see what I got for questions here. Okay, I got a question here, which is a pretty common one. It's about the restoration of benefits, and the answer is yes. To use the return of the restoration of benefits, the client has to recover from that condition. So if they had that stroke and they were in the facility for, I don't know, 7 months and they come out, they have to recover from that stroke. After 6 months goes by, then they're ready to claim again. They couldn't be on the same stroke where they're in the facility for a year, you pull them out, take care of them yourself for 6 months, and then go back on claim again. They're still same stroke. That doesn't quite work. So those plans, unfortunately, Elizabeth, are not available in Florida, and I don't think we ever will. Florida just refuses. Florida and a handful of other states, New York, Washington, California, they just refuse to pass short-term care for whatever reason. The monthly premium does increase. No, it does not. Merlin, the monthly premiums do not go up. You're locked in. Matter of fact, and just on that topic, it's very, very, very highly unlikely that you'll ever see a rate increase in short-term care because they are just one-year payouts. They're definite, they're defined. They don't have unlimited inflation. They've really protected themselves, the short-term care companies. So I cannot see those rates changing ever in the lifetime of that client's. I can't see a short-term care premium rate increase. They aren't guaranteed, but I'm here to tell you that I would be shocked if any of those carriers had an increase. Someone want to see state availability again? I can do that. It's 39 states. I can pretty much tell you from memory that the Four Corners will never approve it. New York, Washington, Oregon, and Florida. A couple of the ones there. Kansas, for some reason, doesn't like it. Minnesota doesn't like it. I'll tell you what, Robert, we'll send you a copy of this PowerPoint so you'll have all those on them. So, and sorry about not being approved in Florida. We do have products in Florida for folks. Home care only products and some other solutions there. So I would tell anyone that's still on here, if you have, I don't care where you are, where your client is, call GoldenCare. We have plans for all 50 states. Work with our marketers. We're anxious to help you. So I'm going to wrap it up with this. I want to thank again you guys for coming on board today. It all starts with you agents. We love our agents. We want to help you. I don't get to sell as much anymore, so I love living vicariously through my agents. So if you have cases to work with, I love game planning with agents, and let's put together a couple options for them. We'll show them this, we'll show them that. I promise you, myself and the other marketers here will help you look really good in this market. So, but it does start with you guys. So give us a call when you're ready. If you have any other questions, 800-842-7799. Otherwise, request to get started. We'll get you contracting and we'll get you going. Thanks a lot for attending today, everyone. Yep, so you'd actually have a nurse come out there, etc. They don't pay family members. So, okay. Thanks everyone for coming on board, and good luck calling. Give us a call at the office if you have more questions. Thank you.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.